Very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we are continuing to work with the EMA envelope with the min-max and the ATR. This is the fourth part of the ongoing series. I hope you are well familiar with the EMA envelope's technicalities now. And the min-max, it's pretty simple. The ATR, average true range, used to measure the volatility. Before we go into the details, here is the standard disclaimer. Again, I would like to remind you that this session is simply for the tutorial purpose, and we will be developing the webinar. Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we are continuing to work with the EMA envelope with min-max and ATR. This is the fourth part of the ongoing series, and EMA envelope is pretty simple. And here is its description. The min-max, the lowest and the highest value over a specified period of time, and ATR is used to measure the volatility of the underlying instrument. Before we get started, here is the standard disclaimer. Again, I would like to remind you that this is a tutorial session and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. And suppose if any of you want to use any of the algorithms, I would suggest that you do extensive trial runs and also allow it to run for sufficient enough time on the demo account to get a idea of the efficiency of the algorithm. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Let's get started. I will explain to you the underlying idea of the algorithm. We are looking for a sell trade if the EMA envelope bands are lower than the values a day back. We are utilizing the shift 6 on the 4-hour charts, and similarly we will be looking for the buy trade if the EMA bands are higher than the prior values a day back. With that, we also need some other conditions which we are putting in for the optimizing entry and exit points, and which I will show you on the visual J Forex setup. So here is the setup so far. This is the standard instrument subscription. We are utilizing the Euro USD as our default instrument. Then the position amount has been defined at 0. The EMA envelopes bands have been set on the 4-hourly time period with shift 0 for the first block and shift 6 for checking the values a day back. We are also using the historical charts data, and we will want to make sure certain conditions are fulfilled in last 4 hours, such as the candle should have closed in green for the buy trade and the candle should have closed in red for the sell trade, and it will also help us determine the underlying momentum. Then the min-max conditions, these are to determine last 5 hours minima and the maxima values, and then we will be comparing these minima maxima values to the minima values, minima and maxima values 4 hours back. So here is the shift 24. ATR to determine the entry and exit points, the stop loss targets, and of course some requirements regarding the volatility. Again, min-max to make sure that there is no undue volatility just prior to executing the trade. So we will be checking the current minima maxima to the minima maxima values 15 minutes back. So here is the shift 3. Time period is defined of 12 of 5 minutes candle, means hourly data will be checked. Now coming to the calculation expressions, we want to make sure that there is enough of difference between the candle closing and the opening, and so here we have done this calculation which we will be comparing to the ATR values, and we have defined the ATR value of 30% of the ATR, and that much difference should be here, that requirement should be fulfilled. Then we set on defining the stop loss and the target price, and then this is the I think this buy entry point, and today we will define the sell entry point, and we will need to do the variable conversion as well. Yesterday we had used the integer data type, and now we will need to bring in a multiplier, because when this variable was in double, it was taking data in the 4 decimal points, and when we want to use the equivalent in pips, we will need to do a multiplication by 1000 to make the variable conversion effective. Before we do that, here is the if condition block. So far we are comparing the high band, current high band, to the prior high band, and then the low band also, and we also comparing the candle close to the lower band of the EMA envelope. Last tick should also be greater than the lower band of the EMA envelope. The candle close and candle open, candle closing should be greater than the candle open price, and the candle difference should be greater than the minimum difference, 30% of the ATR. The minima should be greater than or equal to the prior minima of last 5 hours. Then the last 5 hours minimum value should be above the lower band of the EMA envelope, and the candle low should be less than the higher band, and then these are min-max conditions, minima conditions for the 1 hourly chart, and then we determine the lot size depending on the volatility. If there is less volatility, we will executing the trade with a higher lot size. If the volatility is higher, then we will be cutting the lot size in half. So we are doing that here. Now, as you can see, the stop loss and the target price needs to be in the pips, and when we take the Euro USD value, here I will explain to you the pips. If we are looking for a say 20 pips from here, then it turns out 1.0020, and we want to convert into the integer, so we will need to multiply it with the value with 4 zeros, and that will work out 10,000. So we will need to do that for the type conversion. So let's do it first, and then we will determine the sell entry point and also start building the sell side of the algorithm. Let us first create a new variable, and variable can be double. Ultimately, after type conversion, the end result will be in integer only. So here we take it as entry point pips or exit point pips, EPP, it will do. We take 4 zeros, 10,000. So we are good now, and we bring that value EPP here. Okay, and we multiply it by A3. So here, so far so good. Now let's start to build the cell side, and we will also need to do further calculations for determining the order validity time, which we will do pretty shortly. But first of all, let us start adding the cell side, and then while filling the pending open requirements, we will do the order validity calculations. Our algorithm will be symmetric. That means both the buy side and the sell side should have equivalent conditions, just in inverse fashion. So here again we will compare the current low band value to the prior low band value, and current high band value to the prior high band value. We want the current high band value to be less than the prior high band value, and we want current lower band value to be less than the prior lower band value. Then we want the candle 15's closing price to be less than the high band of the current EMA envelope. So we go for that. Candle 15's candle close, and we compare it to the high band, and we will need the candle close to be less than the high band. We bring in another if block and we put in the requirement. Now we want the last candle's closing to be less than the candle open. Again we take another if block, we join it, we also want the difference between the candle close and the candle open to be less than the 30%, to be more than. So here is the candle open minus candle close, sell candle difference, and it should be more than the 30% of the ATR. So here we take the greater than or equals to root. It is fine even if we keep it greater than. So far we have defined this many conditions. Now we will need to look for further conditions. So let us take these blocks to where they belong. So this is the first starting block, and we now need to check for the min-max requirements and some calculations as well, the elastic price requirement as well. So let's just keep it as first, then here is the second, then comes third, then comes fourth, now we want elastic price to be less than the high band of the EMA envelope. We take elastic as and we want it to be less than the current high band. We also want the last 5 hours maxima current value to be less than the high band. We search for last tick ask should be less than the high band. Okay, should be less than the second input. Coming to the further requirements, let us look for the current maxima of last 5 hours, and here it is. We want the current value and we need to make sure it is of the high ask side high price. Okay, we are right. Maximum value should be less than the high band. So here is the requirement. Now we want the current maxima to be less than or equals to the maxima 4 hours back. So again we take the if conditions block. Maxima of the ask side, this bit side. So here is the maxima, and that is current maxima value. We want ask high price. We want it to be less than or equals to. We wanted current maxima to be less than the high band, and then we want it to be less than or equals to the maxima of 5 hours 4 hours back. So here is a further requirement, less than or equals to. So we are done till here. Now let us see what is remaining to be done. We will also need to take a look on the buy side. So far things look good. Now we compare the 1 hour's min max values to make sure that there is no undue volatility just prior to execution of our order. So we go back to this min max values. We take 1 hour's value, maximum value here, that is bid side. We need ask and a high price. So here this is the maxima which we need, and we compare it to the maximum value 15 minutes back of 1 hour time frame, and it should be less than or equals to. Okay, less than or equals to. And we are also going to need to compare the volatility, but I think one condition is remaining. So we look for the buy side, what we had done there, and the candle high should be above the lower band. So that is a condition which we need to add to make sure that trades are executing only when the price action is closer to the EMA envelope bands. So we bring in this requirement, and for that we need candle 15's high price to be above the lower band, and if we add just a minute, bid. Okay, so let's take this. We have completed the most of the requirements. Now it's time for bringing in the ATR requirements. So we have added these to 10 conditions before ATR requirements kick in. Yes, I think we have done good job. Yeah, it's looking fairly symmetrical. Now we need 2 more if blocks just to make sure that ATR requirements are as per our needs, and we will setting up two values, two different order executions. So here is the ATR, yesterday's ATR value. We want the trade lot size to be higher if the ATR is less. So let me turn the chart in over daily. So here is the daily time frame chart, and as you can see, if the ATR is below 100 pips, our lot size will be of 0.1 million. If the ATR is above 0.01, then the lot size will be of 50,000. So we define it 0.01. Let me check, double check if am I right. 0.01, that will be 100 pips. If it is less than or equals to 100 pips, and here we put a cap of 200 pips, and if the ATR is running above that, no trades will be executed. So this is 0.02, and we need to take in two pending opens, and here sell limit order. Oops, I think I have wrongly joined the dots there. If the ATR is below the 100 pips, then it will go for order execution less than or equals to. If it is above the 100 pips, then it will check whether it is below 200 pips or equals to 200 pips, and it will execute the order with a reduced lot size. So this is how it will work. Sell limit. Now let us take these blocks, but we will also need to get in the buy and the sell price. So here is our we will need to define the sale price. Now we will need to do the calculation. We need calculation expression. We take in the ATR value, line 18, and then we add 20 pips to the last tick price. So we have already defined the variable to multiply the ATR with, and that variable is TAE. We take in TAE is defined as 0.2, and we take last tick price, last tick. We will add it to the ask side. 2-bit side, no issues. It will be good if we add it to ask side. Not much in diff. Oh, last tick ask should go here. And T, we will again need to bring it back where it is. Here it is. Oh, now it's getting frustrating. T here. And again we need to go back to bring the ATR value. We also need to define the order validity time, and let us be careful this time. Yes, we will do A3 plus A1 into A2, and this will be SEP, cell execution point. Okay, so here we are. And with this we have defined the cell execution point. Now we need to define the order validity time, and for that we need to bring in calculation expression, and then do a type conversion also. Here the end result should be in the long type, so we bring in last tick time, last tick time. We will keep the order validity for 3 hours, so we need to create 2 more variables. One is tick time, and it will be 1 hour contains 3.6 million ticks, so we need to be careful to count zeros correctly. Yes, I am almost right. You can point it if I make a mistake here. As far as I think I am right, so we do that, and now we bring in that variable tt, and we create another variable order validity ov. We keep it 3. You can make changes as per your requirement. You can keep the order valid for 1 hour, 2 hours, 3 hours, 2.5 hours, whatever. And here we will do a1 plus a2 into a3. Okay, and now we do the type conversion. We take the value here, good till time, we make this variable o vt, and we save it. And we want it to be the result. So here we are almost done now, and we are also we are already past our scheduled time, but still we will do the finishing touches today itself. We might not be able to do a full-fledged test run, which I leave up to you. You can do a full-fledged test run. We will do maybe some trial run for a couple of hours or days. And now we will take in cell limit SCP. Default instrument will remain as it is. We are going for, depending lot size will depend on which ATR is this block connected to, but let us put in the common values. Stop loss is going to be dynamic. The take profit is also going to be dynamic. Slippage is going to be 2 pips. So here is our target price. Here is our stop loss. Slippage is 2 pips. And the sale price will be the SEP. And also for this stop loss will be SL, and the target price is slippage is 2 pips. We will define the lot amount depending on our other ATR conditions. So here we are almost done. We had defined these values yesterday, the stop loss and the target. So here the SLP is defined at 30% of the ATR. The TPP is defined at the 75% of the ATR. So now we go back in time. Sorry, not go back in, no need to go back in time. So we are almost done here. We will do the trade amount requirements now. So here is our algorithm's final touches. Here are the final touches. And now the candle high should be above the lower band. So this is the requirement, and this is here. And coming to the lot amount. So lot amount will be higher when the volatility is less. So here 0.1 million, and trade amount will be 0.05 million. Okay, so it looks good. We need to put in the order validity for this side. 2 pips, slippage is 2 pips. We have put in all the variables on the sales side. We just need to put in the order validity time for the buy side, and then we are all set to do the test run. Here we take good till time. Our order validity will be for 3 hours, and we are done now. We save the file and we try to export it. Today we will extend the session bit by 3-4 minutes more, and we are already past our time, so it might be around 45 minutes, so just bear with me. as I wanted to complete this setup in today's session itself so that we can start with something afresh tomorrow. So here we are, let's save the file. April 1st, save it. Okay, now we export the file in Java format and our strategy error, please connect a start point to your strategy and fill all connected blocks. I think we are good. Let us see what happened. Because if we can see the flow, then it should be all good. Yes, all the blocks are connected. Save the draft. Yes, now we export it in Java. Okay. We saved that and now we go to the J4X platform to import the file here. And here we will need to look for the same file and it is in April. Open. Here it is and let's compile it. Okay, compilation. Compiling. Compilation successful. That means our algorithm is machine readable now. And we can test it. We will not try to customize it. We will run it as it is. We take the instrument as Euro USD and we test it on prior week. All good. Let's see. 0.5. We don't change any values here, just this. Okay, let's run it. So here is our algorithm test run. If it is fast enough, we will do a couple of days or maybe we'll close it fast. Just a minute and then we will wrap the session for the day. Let's see if any trade is executed. Yes, it's fast enough, but we don't know if any conditions will be fulfilled or not. And if no conditions are fulfilled, even in that scenario, no trade will happen. And if the conditions are fulfilled, then some trades might happen. So as you can see, our algorithm is running, and depending on what kind of result it will give, we will get further clarity if it's working properly or not. So I would suggest that you try to follow the setup and you build it with some of your modifications as well. So here we wrap up the session. We will be back tomorrow with a fresh setup. So we stop the test run here. The whole purpose of making sure that it's running and it's working. So we did a test run for a day, but we didn't really get any trade during that duration. And you should do test run for lot more days. So once again, I would like to thank you all for joining in. See you tomorrow. Goodbye.